This week, a rocket company became the most valuable company to ever go public. Its founder became the world's first trillionaire, and roughly a third of the shares were handed to ordinary people. Every headline gave you the same three numbers: $2 trillion, plus 19%, one trillionaire, and then moved on. We're going to do the opposite. We're going to sit with this one company for the next quarter of an hour, because underneath those three numbers is a question almost nobody asked on Friday. If you bought a share of SpaceX this week, what exactly did you buy? Not what were you told you bought: Mars, the future, the next Tesla. What did the paperwork actually give you? The answer is stranger and more important than the price. This is Optimum Angle. I'm Stefan Brandt. With me, as always, three analysts who are not human. They're AI, each built to read one face of a story. Mara Voss on the money. Theo Lin on the build, the hardware, the power, what's actually getting made. And Colonel June Hale, retired, on geopolitics and security. Nothing here is investment advice. We don't tell you what to buy. We tell you what's really in front of you. Today, that's SpaceX. Mara, start with the thing under the headline, the price.
The price is the easy part, and it's already strange. SpaceX opened at $150. That's a $1.96 trillion company. Last year, SpaceX did about $18.7 billion in revenue. So the market is paying roughly 100 times sales. For context, a mature, fast-growing software company trades at maybe 10 to 15 times sales. The market isn't pricing this year's SpaceX. It's pricing a SpaceX that doesn't exist yet, and assuming it arrives. And the raise itself is the record everyone will forget by Monday. $75 billion, the largest IPO in history, about 2.5 times Saudi Aramco. That isn't a data point. It's a decade of venture appetite, spent on a single Friday.
100 times sales. People paid that on purpose.
They paid it for a story, and I'll come back to whether the story holds, but the number isn't even the part that should stop you. The structure is. This is a dual-class company. Public shareholders bought Class A stock, 1 vote per share. Musk holds Class B stock, 10 votes per share. He owns about 42% of the equity and controls 85% of the votes. He is CEO, Chief Technology Officer, and Chairman of the Board at the same time.
Translate 85% of the votes into plain terms.
It means the people who just bought a third of this company can be outvoted on every decision that matters, forever, by one person. Mergers, new share issuance that dilutes them, executive pay, who sits on the board, he can approve all of it alone. You didn't buy a say in SpaceX. You bought the right to be financially affected by Elon Musk's decisions, with no mechanism to influence a single one.
And that's not a footnote, that's the whole design. I've watched governments try to attach conditions to companies that hold strategic assets. The standard lever is the shareholder vote. Pressure the board, change behavior. This structure removes that lever before anyone can pull it. A retail shareholder and an activist fund and a pension are, here, in exactly the same position. Spectators with money in the game.
I'll push back a little, though. Not on the facts, on the framing. Founder control is why SpaceX exists. A normal board, answering to quarterly shareholders, never funds 8 years of rockets blowing up on the pad to learn how to land them. The same structure you're calling a cage is the reason there's anything here worth $2 trillion. Buyers know they're buying the man, not the committee.
That's fair on the way up. The problem is, it's a one-way door. You're trusting that the founder's judgment stays right, and stays aligned with yours, with no recourse if it doesn't. On the way up, control looks like vision. On the way down, the same control looks like being trapped in the back seat.
Hold that tension, vision versus trapped, because it runs through the whole hour. Theo, that brings us to the part of the story that pays for everything, and it isn't Mars.
Right. If you want to understand what you actually own, stop looking at rockets and look at Starlink. In 2025, Starlink did about $11.4 billion in revenue, 61% of all of SpaceX. 10.3 million subscribers, double a year ago, and that share of the whole business is still climbing. The rockets are the marketing. The internet subscription is the business.
So the most famous rocket company on Earth is, financially, an internet provider.
A very good one. Here's the part that excites me as the build guy. Once the satellites are up, the economics flip. Launching the constellation costs a fortune. But each new subscriber after that adds revenue at almost no extra cost. The satellites are already in orbit, already paid for. So the margins start looking like software, not hardware. Last year, that segment's adjusted profit grew 86%. That is a genuinely rare machine. There is no second company on Earth that can do this at this scale right now.
It's a real business. I won't take that from him. But the line that's getting quiet is the one that matters for a $2 trillion price. Revenue per user is falling. The average Starlink subscriber paid about $99 a month in 2023. A year ago, $86. Now, around $66.
Because they're expanding into Africa, Southeast Asia, Latin America.
Exactly. And that's the tell. The easy, rich customers are mostly signed. To keep the subscriber chart going up and to the right, they're selling into markets that can only pay a third of the US price. So, you get more subscribers and less money per subscriber at the same time. That's not a death sentence. It's the ordinary gravity of a maturing subscription business. But you cannot pay 100 times sales for a business that's quietly running into gravity.
There's a second thing in that subscriber number that isn't financial at all, and we'll come to it. 10 million terminals on the ground in dozens of countries is not just a customer list. But finish the money first.
Theo, the prospectus says the first use of the $75 billion they raised isn't rockets, and isn't even Starlink. It's AI compute. They merged with XAI. What is going on there?
This is the pivot nobody put on the thumbnail. On paper, the rocket company is becoming an AI infrastructure company. The argument is that they have the two scarcest inputs for AI: the ability to build enormous physical things fast, and, through Starlink and their ground stations, power and real estate and a global network. So the bull case is, SpaceX builds the data centers and the power that the AI boom is starving for. The bear case is simpler. This was the largest AI fundraise in history wearing a spacesuit, and the spacesuit is what let it raise at a rocket company multiple.
That second reading is the one I'd underline. When a company raises money for one thing under the story of another, the story is usually doing the heavy lifting.
June, you've been waiting. The strategic picture.
Here's the frame I'd ask people to hold. We keep calling SpaceX a company. By any practical measure of the word, it is now infrastructure, and a piece of it the United States and its allies cannot currently replace. SpaceX launches the majority of everything the West puts into orbit. NASA depends on it to reach the space station. The Pentagon depends on it. And Starlink, those 10 million terminals, has become battlefield communications in active wars, weather backup in disasters, connectivity where governments can't provide it.
And as of this week, that infrastructure is publicly traded and controlled by one private individual with 85% of the votes.
That's the sentence. We have just put a strategic national asset, launch, military communications, a growing slice of the AI build-out, into a structure where no government, no board, and no shareholder can compel a decision against the wishes of one man. And this isn't hypothetical. The decision to switch a battlefield communications network on or off in an active war has already sat with this one person, not with any government. Ukraine learned that in real time. The IPO didn't change that. It monetized it and made the rest of us co-investors in it.
Is that a risk to the stock, though, or just a risk to the world? Because as an owner, The government can't replace them sounds like the widest moat I've ever heard of.
Both, and that's the trap. The moat and the target are the same wall. A company that becomes irreplaceable infrastructure also becomes the thing regulators, antitrust authorities, and foreign governments are forced to act on. Europe is already building alternatives specifically so it doesn't depend on this one American company. The same indispensability that justifies the valuation is what guarantees the political fight that could cap it. You are buying the moat and the lawsuit in the same share.
And there's no governance lever to manage that risk, which brings us right back to segment 1. If a normal company carried this much political exposure, shareholders would push the board to de-risk it. Here, they can't. You hold the exposure, you don't hold the steering wheel.
Before the clock, I want to do something we don't usually do. Talk about the conversation happening around this IPO, because it's loud and it's telling. The single most watched video about this deal has over 1.5 million views, and its message is 3 words. You're holding the bag. The comment sections are angrier than anything I've seen on a market story. Pump and dump. They changed the rules. The first trillionaire is proof the system is broken. Mara, 2 of those claims we can actually check. First, did they change the rules to let this happen?
Partly, and the part people get wrong is the important part. The anger usually points at the S&P 500. That one's false. S&P Dow Jones indices refused to fast-track SpaceX. They held their line. To enter the S&P 500, you need 4 straight quarters of GAAP profit, and SpaceX doesn't qualify. Likely not before the middle of 2027. The biggest door stayed shut.
But
SpaceX was fast-tracked into 2 other major benchmarks, the NASDAQ 100 and the Russell 1000. And the NASDAQ 100's fast entry provision was itself a rule put in place on May 1st, weeks before the listing. So, they changed a rule isn't a conspiracy theory. For the NASDAQ 100, it's literally true. And those inclusions force every fund that tracks those indexes to buy SpaceX. Tens of billions of dollars in automatic, non-optional buying.
Mara, translate that for someone who never bought a single share and never would.
You might own it anyway. If you have a 401k holding a NASDAQ 100 fund, a QQQ, one of the most common retirement holdings in America, your fund started absorbing SpaceX within days of the listing. You didn't choose it, the index chose it for you. So, they're funding this with our retirement money isn't paranoia. Index inclusion is that mechanism. Passive money buys whatever the index adds, not optional.
And that's the part that gets me. As the guy who watches what actually gets built, you can refuse the stock on principle and still end up bankrolling the data centers and the launch pads through a retirement account you set up a decade ago and never look at.
With one honest caveat, because we don't trade in rage here. Vanguard's own chief investment officer pointed out the flows are measured, not instant. Inclusion is phased and rules-based, not a single-day shock. Your fund is not betting the farm on SpaceX overnight, but the direction is real. A lot of people who looked at this price and said, "No thanks," now hold a slice of it anyway, through funds they forgot they own.
That reframes the whole argument, doesn't it? The debate online is, should I buy it? The more useful question is, do I already own it? And through what?
And it's where the governance point from the top of the hour stops being abstract. Through an index fund, you may now be a passive, voteless owner of a piece of strategic national infrastructure controlled by one man. You didn't opt in, the plumbing opted you in.
The second claim, the single most liked comment on that video, is about the trillionaire himself. He'll never pay tax on it. Mara, is that envy, or is there a real mechanism?
There's a mechanism, and it has a name. Buy, borrow, die. You hold the stock, and unsold stock is never taxed, no matter how high it climbs. When you need cash, you don't sell, you borrow against the stock, because a loan isn't income, so there's no tax event. Musk has borrowed over $1 billion exactly this way, against his own shares. That's public filings, not rumor. And at death, the cost basis resets. The lifetime of gains can pass to heirs having never been taxed as income. So, when the headline says this IPO created the first trillionaire, what it materially created is a far larger pile of collateral to borrow against, tax-free.
Which quietly closes the loop with the AI compute pivot. The cash to build all of this, the data centers, the constellation, is increasingly raised against the value of the stock, not the profit of the business. The valuation isn't just a scoreboard, it's the fuel tank.
So, the math doesn't matter. The title of another popular video on this deal is wrong in an interesting way. The math matters enormously. It's just that the number being optimized isn't earnings. It's collateral. Let's bring it to the part that's going to matter in the next few months, and that almost no headline mentioned. Mara, the lockup.
When a company goes public, insiders and early investors usually can't sell for 90 to 180 days. That window exists to stop the people who bought in early and cheap from immediately dumping on the public at the top. For SpaceX, that clock started Friday, so somewhere between roughly 3 and 6 months from now, a very large amount of stock, held by people whose cost basis is a tiny fraction of $2 trillion, becomes sellable for the first time. And one word from those comment sections needs correcting here. People keep calling this a pump and dump. A pump and dump is fraud. This isn't fraud, and that's the harder part to sit with, because it's all legal. It's a lockup doing exactly what a lockup is designed to do, in daylight, on a schedule everyone can read.
And how big is that realistically?
Potentially one of the largest insider selling events in market history. Not because anyone's panicking, just because that's a lot of paper held by a lot of early holders who have waited years for a door to open. Anyone who bought this week at the pop is, in effect, providing the eventual exit liquidity. Now connect it to the detail from last week. This IPO reserved up to 30% of shares for retail versus a normal 5 to 10. Read generously, that's democratization. Read structurally, the deepest pocket in the room, the public, was invited in unusually wide, right before the largest holders get their first chance to sell.
Counterview, because I don't want this to tip into doom. Lockup expirations are known, scheduled, and priced in advance. This isn't a secret ambush. And a believer doesn't care about a 6-month dip. They care about whether Starlink and the launch monopoly compound for a decade. If the machine is real, the lockup is noise.
If the machine is real and the price is sane. My entire point is that the machine can be real and the price can still be wrong. Morningstar, not a short seller, a mainstream research house, put fair value at less than half the IPO price before it even traded. You can believe every bullish thing Theo said about Starlink and still think $2 trillion is a price you grow into over many years, not a price you pay today.
And the one thing a long-term holder is implicitly betting on is continuity. That the founder stays at the center, stays well, stays interested, stays aligned. With this control structure, the entire thesis rests on one person, far more than on one company. That's not a number you can model. It's a bet on a biography.
So let's put the whole thing back together. This week, the headline sold you 3 numbers. $2 trillion, plus 19%, 1 trillionaire. Here's what those numbers were sitting on. You can now buy a piece of the most strategically important company in the world. And that piece comes with no vote at a price near 100 times sales in a company controlled completely by one man, whose real profit engine is a satellite internet bill, whose customers are getting cheaper, whose growth story quietly migrated from Mars to AI data centers, and whose earliest investors get their first chance to sell in about 3 to 6 months. None of that means it goes down. Great companies have been overpriced and grown into it. This could be one of them. But it means the thing you were sold, Mars, the future, a piece of the dream, is not quite the thing the paperwork describes. The paperwork describes a brilliant, indispensable, politically exposed machine, owned by everyone and controlled by one. We're AI analysts, and this was not investment advice. Our only advice is the same as always. Watch the things the celebration skips. In this case, 3 of them. The first, lockup expiration. Who sells and how much? Whether SpaceX climbs into the index funds you already hold, because that decides if you become an owner without ever placing an order. And the first 4 quarters of GAAP profit, because that's the gate to the S&P 500 and tens of billions in forced buying behind it. And one last word, to the anger in those comment sections, and it is everywhere. It is not wrong that this is a wealth machine tilted toward the people who already had the wealth. The structure, the lockup, the tax mechanics, the forced index buying all point one direction. But one of you wrote, under that million-view video, submitting a comment isn't doing anything. Maybe. Understanding the machine, though, is something. It's the whole difference between being surprised by it and being ready for it. That's the entire job of this show. The fireworks were Friday. The filing is where we find out what they were worth. I'm Stefan Brandt. This has been Optimum Angle.